every trader has two time frames which they use. So this is the uptrend, and possibly you are going to understand it for a downtrend. So in an uptrend, you wait for a break of structure like this, and it gives you support, a swing low, and a high. Now when you have this, you need to pay attention to what the market is doing before it gets down. So before it gets down to this place, you need to pay attention. Either you are trading this pullback leg, or you want to trade the continuation of this downtrend, that is, this uptrend, which is this move, this leg. So the moment price gets here, then you look for entry and trade, or you trade the two of them. Now let's start with one. I trade the pullback, and I also trade the continuation. So take this as your higher time frame, 4 hour time frame, 1 hour time frame, whichever time frame you want to use as your higher time frame. But you know that you are going to step back, and every time frame has their own subordinate time frames, which is, you cannot just use any time frame for itself, or just use any time frame as higher time frame. They have their pair time frame. I don't know if you understand me. So to not make this video long, after you get your break of structure like this, let's label this one BOS. When you get your break of structure and your swing low, those two are very important in a uptrend. If it's in a downtrend, you mark your swing high. So you mark this one swing high. But me, I'm not marking this one swing high, but I can just leave it like that. Now, price needs to what? Get back to this point of support before we buy. But before price buys, you know that price will sell. So in your higher time frame, which is, for me, I use the 4 hour time frame as my higher time frame, I look for something like this. It happens in different ways, but I will show you the simplest form. So in this particular place here, you see something like this, comes down, comes here like this. Sometimes you can see a weak rejection again, and it come like this. Already this is a change of character in the 15-minute time frame, because it now becomes an internal structure for me in the 15-minute time frame. I call this a change of character. Why? Because here was a break of structure in the 15-minute time frame, or a liquidity sweep in the 15-minute time frame. Do you understand? So once price has taken that, then we head on to waiting for pullback that will give us a sell entry here. So we'll be looking to sell the market at that level. So when price comes there, then we put our entry to this place, and we sell back to what? To support, and our stop loss will just be around this level. So if you can be able to understand this concept just like this, you'll be able to make sometimes $100, depending on your patience and the amount of trades you take, you understand, and your account size too. So since we already know this one, I'll be showing you some other factors that you need to put into consideration before this thing can work effectively. Number one, you need to understand the concept of protected highs and protected lows. So let me leave that for you. So protected high is something like this. Let's say we have a break of structure like this. This structure is not a protected low. Why? Because it did not sweep liquidity. There was no liquidity that it swept here. So let me show you the context of a protected low or a protected high. So if you have something like this, this is what is significant protected low. Why? Because it took out this liquidity. Some people will call it change of character. It took out this liquidity, and there was a support here, and price used it as what? To push the price and give us a major break of structure. Do you understand? So if you want to now look for another one, you're supposed to be expecting something like this. Why price was going, price will give you something like this and push up. So we now have another liquidity resting here like this. So we wait for price to do what? To do the same thing, take it and buy up again. giving us another new break of structure. Do you understand? So it's as simple as that. So if we now flip this thing the other way round, you can see it now, right? So I'm going to erase this one so that you can understand what I want to talk about. Let me erase this. So now look at this context, exactly what I said, and it's still the same thing. Now we had a break of structure to the downside, a major one, right, in the 4-hour time frame. Then we look for what? A liquidity sweep, which is what is happening here. Price sweep this low and price drop down. I don't know if you have seen it. Price sweep this low here and price drop down. You see it? Price now pushed up, took this high. So when price retraces back, we are buying back up. So it's as simple as that. So what will you be looking for in this particular scenario? You'll be looking for price to come down to this support and what? Buy back to the resistance, and you sell back to the support again. So the moment price takes out this low completely, then you know that you now have a new trading position. So your new trading position is here. You look for same thing again, wait for it to happen. If it takes liquidity or it grabs it, there are two different things. If it grabs it, that means it will close with the body, but just wait for it to take the high. The moment it takes the high, that is your confirmation. You wait for a pullback and you take back what you want again and continue breaking structure like that. So it will continue breaking structure until it wants to now change character. Then maybe you see something like this again. So it will now change character, and when it change character, you wait for a pullback again and trade back to here, and you buy back like that. So it's just like that. It's just going to continue the cycle until it does, like, it's just like that. If you look at XAUSD code, this is a very clear example of what I was explaining on the first video. So first of all, let's go to the 4-hour time frame so that you'll be able to understand the concept of everything that we're doing. Do you understand? So when I say you can trade the 4-hour time frame with the 15-minute time frame, it's possible. Now I'm not discussing how to enter here. I'll be doing entry in another video, maybe not today. So right now you can see that we had a major break of structure here. Yes, so we had a major break of structure here. Where is the direction of the trend? Some people are going to be looking at this region. Fine, you can look at those regions for context only. You cannot use it to do entry. How will you be waiting for price to come to your point of entry in your 4-hour time frame when you are not a swing trader? So I only do this for context, to know the directional bias of the whole trend. You understand? So if they ask you on the 4-hour time frame or on the higher time frame, what is the daily bias? What is your trading direction? Is bearish, right? It's bearish. Why is it bearish? We had a break of structure here. We had a pull to the upside. This was the last low that gave us a change of character that took out this low, and price dropped, pushed up again, dropped, pushed up again, dropped, and break this new high, created a structure, pushed up again, dropped, and broke another structure here, and it took out this low, which was the last low, and we had a change of character, break structure again, broke structure here. This was very tiny structure and not be significant. So this is where we'll now be looking at it here. So this was our last low that price broke, and finally price broke this external structure. So everything, you can just leave everything to cover up for the noise and just mark it like this. So this is your major break of structure instead of marking every level. And you can also mark this one that I marked here too. So that is the only two break of structures that we are looking at in the market. So what? We are bearish and we are trading what? The pullback. So in a bearish market, you look for sell entry, and where will it be your supply zone? Here, of course. Here will be your supply, where you'll be expecting to sell the market from. Why is it your supply? That was the last pullback for price broke structure. So if you look at it very well, you see it well. That was the last pullback. And if you extend your structures well, so that you, all right. So this is it. This is where we'll be trading to. You understand? So now we are done with the 15-minute time and the 4-hour time frame. Let's go to the 15-minute time frame so that you can understand. But here now, I will not even, or let me show you just one last thing on the 4-hour time frame before we go. Now, this was the concept I explained on that short illustration after we draw the main trend. So this was the drop. We had the pullback and a break of structure, and we had liquidity here. This is liquidity, right? And price push again. Now the moment price come here like this, it has already given us what? It has taken out liquidity. That's what makes this low strong. Without this thing that occur here, this low would not be strong. So once price taps here, then what? We look forward to price to come down again to take a fresh low. The moment price takes a fresh low, then you know that that is a new point of interest. Your support can be anywhere. It can be here. I mean, your supply can be here. It can be here too. Depend where has been protected. So protected lows and highs tends to help you know exactly where price is going to. So you can see it now. So since we already know that, let's go to the 15-minute time frame. 15-minute time frame. So all right, so on the 15-minute time frame, this is what we have. Now you can see that it's very, very, very complex than before. So let's break it down in the simplest way that we can. All right, so I will start from where price started dropping from. So when price dropped here, we had a break of structure here. This was the last break of structure to the downside, right, that we're talking about in the 4-hour time frame. Now after this break of structure, we'll treat the 15-minute time frame as 15-minute time frame. If not, you will make mistake. So this is another break of structure here. We had a new break of structure here. If you don't mark it out, you will not understand. So this is a break of structure. Then where is our swing high? This is our swing high that is responsible for the break of structure. So you mark it out carefully, make sure that it's aligning. So what do we have here? We have a change of character because price closed with the candle body. This is what many people fail to understand. So price closed with the candle body, we call it a market structure shift or a change of character, whatever you want to call it. So where did price now go? Price now went to a point of what? Support. To a point of support. This is where price uses breaker block here. So but the breaker block was big though. So when price tapped into it, price now what? Price moved up higher. Price moved up higher, giving us what? A new break of structure. This is the new break of structure. So after this break of structure, we mark our support again, right? We wait for liquidity to be taken. These are all the liquidity. So this is probably our support. Yes, these are support. Price tapped into the support and price was pushed up again. So where is our last high? Our last high is here. Our last high is here. So we'll extend it till we get to this point. Yes, so this place is our swing high that we're expecting price to take out. So when price tapped here, we can now break this further more. We had another internal structure here, which is this high, because this high and this high are equal. So take this one. Okay, no, let's not take that one. That one is still low. So let's take this one. Take this high. We had the break of structure here, and we have the support. So this is exactly where we're expecting our trade from. Now you can see the reason why I put my entry here, right? So this now brings us to where you understand the concept very clearly. So you can see now we had another new break of structure. Now my protected low, where is it? My protected low, this is my protected low. Anything that breaks this low will now become a change of character for me. Maybe not really a change of character, but for now it becomes my change of character until I see what price is going to do. So this place too, price can come here and it's not still going to become a change of character, you understand? So the only place that makes this thing a confirmed change of character is until it breaks this low. That's when it becomes a change of character. So but anything that happens, you need to treat it the way it is. understand the structure. You understand? So let's mark this as a break of structure. Then this is my liquidity sweep that made it a protected low. So it took internal liquidity inside here. So when price was coming down, it pulled back and broke structure. So this structure it broke was supposed to make price to continue going down, because here like this it was already bearish in another time frame. Let's say the 5-minute time frame, it will be already bearish going down. So some traders will already be trading down, but it's a liquidity sweep. So it tapped into this other block. And what? And broke structure. So that leaves us with a new order block. So this place will just be like our entire order block in case. But for safety, this is where I'll start my order block from. Then to be looking for exactly place I want to trade from, because this place is not really clear. If we want to call order blocks, we can call this one order block. We can even call this one order block too. There's one order block here, and we have another one here too. So these three are order block, but we need to understand to validate them. So the first thing I do, I use Gann box. This Gann box tool helps me to understand, or Fibonacci. Yes, this Fibonacci. This is not Gann box, but I'm going to use it. So I'll use my Gann box also. You can use the two together. I'll use one, but let me use the Gann box. I prefer using the Gann box than the Fibonacci. Now this red side is the discount, and this other red side at the top is premium. You sell from premium and you buy from discount, right? So that's how I'll do it. So what I'll do is I'll wait for price to come back to this premium. So where will now be my order block? Anything corresponding with this premiums, this discount zone, is where I will use. So this is the closest order block here. I'll just mark it like this, then I'll delete it. So I've gotten my premium zone, my discount zone. So this is where I'll be looking to trade from. Do you understand? So you can also see that we have an equilibrium where price can also buy from. So we can still put this into consideration. Yes, this place, this is equilibrium. Equilibrium is 0.5. We have numbers here: 0.75, 0.5, and we have 0.25. So from 0.25 to 0 is our discount, and from 0.75 to 1 is our premium. So it's as simple as that. And if you want to also trade this, like the example I illustrated for you, trading a higher time frame in a lower time frame, for instance, using the 1-minute time frame, you need to wait for what? A break of structure, which is, you wait for a break of structure. So we have a break of structure internally here. Let me mark that so that you will see it. We have one break of structure here like this. And where is the swing low? This is the swing low. This is the swing low. So wait for the swing low to be taken. You wait for the swing low to be taken like this, and the moment the swing low is taken like this with a candle body closure, you wait for a pullback, and you can now sell what? To this support. Do you understand? So the concept is very simple. If I choose to sell on gold, it's not bad because I've explained it for you now. Now if you want to do this thing in the reverse, which is knowing where your order block will be, is now, let me show you now. So let me delete this and draw it in the opposite way. So I'll draw it from here to this point here like this. Where is our premium? In fact, I don't even need to draw it again. I just need to do it the same way. This is our premium and this is our discount, right? So this is where I will be looking for selling opportunities, but I need to take this low. So it's still inside the premium zone. You understand? Even though it's in this place now, it's still in the premium zone. So everything like this now, if you can be able to understand it, then you are good to go. You can make profit in the market without much fear. So that is everything.